Hey guys, it's Max. How's everyone doing? Hope everyone's having a good day. It's just about noon here. Market's been open for a little while. Let's take a look at these Defiance funds. Well, another day, another face ripper for Tesla. Look at that. Did you take a look at that? All right, we'll get onto the single stocks in a second. Let's start with the Defiance option positions real quick. This is triple QY. You can see their profit box right there, which is the area which they're profitable. Top line's max profit, bottom line is break even. They're right about halfway right now. We'd expect a half profit for triple QY. We can look over here at SPX. This is what JEPY traders trade. We'd expect a little bit less than a half profit of what they were going for JEPY at this moment in time. We'll check the spreadsheet in a second. Finally, there's Russell 2000, which is the small cap index. And look at these guys. These guys had a huge gap up this morning. And even though it's pulled back a little bit, it's still above their max profit line. So this one's a max profit. So now let's check the spreadsheets and let's make sure that the spreadsheets agree with the charts. All right, so let's do it in the same order we did it in. So triple QI. All right, triple QI. I said we'd expect about a half profit, right? Well, they were going for 991,000, which was the original max. Right now, they're realizing about 431,000 of that. So about half profit. Not a bad job of buying that. Now, this right here, earnings per share is actually positive, which is nice. It was positive last month, too. I lost track of it, but it was 41 cents last time I checked. It probably finished about that positive for the month. I just didn't track it for a couple of days. All right, well, that's great. So now let's look at JEPY. Now, remember, this one I said to be a little bit less than half profit. So sure enough, these guys are going for 273, and they're only hanging on to 15,000 of it right now. But that's still 13 cents a share on an earnings per share basis. Dividend estimate is a low 38 cents. We forgot to check triple QI. Triple QI's dividend estimate is not as low, but still a fairly low 65 cents. Now let's go over to IWMY. IWMY. Somebody's texting me. Let me see who it is. Okay, I'll look at that later. IWMY. Okay. Okay. This one is the one that I said would be a full profit because it opened with a huge gap and it's holding above the break-even line. And it's exactly what we said. They're up 800,000, up 3 cents a share on the month, and the dividend estimate is a pretty low 53 cents when you consider a lot of the past ones have been more than $1. So we'll see. Like I always say, it's early in the month, but it's not as early as it was. We're through with about a third of the month right now, third or fourth of the month at this point. Now let's check USOI. I'm so sorry I forgot to check it Friday. I'm going to give you guys a shock collar. And every time I forget to do something that I promised to do, you guys can remotely shock me until you condition me to remember everything. All right. Well, these options we looked at the other day because they wrote these on Friday, or I put them in the book the other day. They wrote these on Friday. They don't expire till Wednesday. They have an 81.5 and they have an 82. So let's kind of just look what that looks like graphically. Now, these guys, it's not a covered call. It's a short put, but math-wise, it's the same thing as a covered call. The math equation that works out the same. It's not really the same thing, but the math, the profit loss, the risk is the same. Let's just put it that way. Okay. But you can see these guys have room for USO to appreciate before they're capped out. So, if you were looking to pick up this fund, it wouldn't be the worst time to pick it up. You wouldn't want to pick it up after it's already capped out and before they rolled. I wouldn't think necessarily, but right now might not be a bad time to pick it up if you were looking for it. This fund's been doing really well. All right, now I never talk about Tress that much. Let's just look at the chart. We'll just look at the chart and see if it's still in the valley of death. Unless it's out of the valley of death, there's not really that much to get excited about. So let's go over to the yield max funds. Let's start with Tesla, because Tesla, we can look at Tesla and we can look at Crash. Tesla is the yellow boxes. Now, these are actual covered calls. The yellow box is a covered call. The red box is a covered put. Anyway, this is two funds right here. Crash is running the covered puts. They're the red boxes. And like I say, the yellow ones are Tesla. Now, Tesla's blown out their strike price and just, they've been blown out. I mean, this is crazy. And this is a nightmare for an option trader when this happens. This is a nightmare, especially there's something called a buy right, where you decide, hey, I'm going to go out and buy stock. And I'm going to simultaneously write an option. And there's all kinds of strategies and stuff. But basically, you look for high IV, and you know, it's what they do on ULTY. They buy it and then write it immediately. Well, anyway, if somebody did a buy right, it's not that you aren't making money, but you're just kicking yourself that you wrote. You're just looking at this chart and going, why didn't I just buy? Anyway, it's a good problem to have to max out your profit, but this is a very frustrating thing. And the thing about this is sometimes you get stuck where you really can't roll, and because it's hard to describe. I think Retire on Dividends is going to be speaking with Jay. I think maybe today or sometime soon. I'm sure they'll talk about this. I don't know there's much you can do about this, or actually I do know what you can do about this, but no one's doing anything about it right now at this point. But I talk about that in my interview with Jay, and that video, I got it done last night, so it's recorded. I just need to release it. I got it done like at 3 o'clock in the morning. I worked on it from 9 in the morning yesterday till 3 o'clock, till I finally got a take I like. I may shoot it over again. I'm not totally, but anyway, good news on that. All right, Nvidia. These guys went from a 5-strike ladder to a 1-strike ladder. So they rolled out to 132. They put all their contracts in the 130. I have it drawn a little bit wrong, but it was the 132. All right, so I'm sorry about that. These are approximations just to kind of, these aren't intended to be to the penny. I like to look back at these graphically and see how these guys move their strikes and how I'm hoping maybe this will help me with my own strategies and stuff. I don't know. All right. Well, anyway, Nvidia's in good shape, and they have room to appreciate. When they wrote that option, is 5% of the money, so they can appreciate 1% per day, and that's reasonable. That's reasonable for a cover call strategy. So now let's check out Coinbase. All right, they have one strike, the 235 way out of the money. Plenty of room for upside. If somebody's thinking about jumping in Coinbase, this would be a nice area. Look at this down here, trying to make a double bottom. Maybe, I don't know. Hopefully, they're trying to find the bottom down here. Then Coinbase has been beat up, to drop all the way from 280 to what 200 in 2 weeks, week and a half or something. I mean, it's been beat up. So maybe it's due for a bounce. We'll see. What else do we have? How about Mister, which is the high yield fund's name is Misty. And I just remembered I forgot to pull the latest options, but it looks like these do go out. Well, all right. On these, I'll have to pull the latest option. Whatever they wrote, these guys write options so far to the money. They aren't in any danger right now. It's not like they wrote an in the money strike. I bet they did. Anyway, I'll figure that out later. I'm sorry I forgot that I was covering Mister. At least I didn't forget to cover USO today. So tomorrow I will remember to cover Mister, Misty, and USO. All right, and all of them. All right, so I'm also promised to cover the Tesla Crash pairs trade. I want to start showing that trade as a pair because a lot of people are trading that as a pair. And that's pretty much all Jay and I spoke about in the video, was that pairs trade and other pairs trade and what's called delta neutral trade. So anyway, you'll see a lot more about that in the video whenever it comes out. And on the pairs trade itself, I haven't figured out the best way to show that. Like I said, I think I have a way to do it, but I haven't figured out the best way to show that. Right, it's been getting killed lately because the Tesla side is just capped out, and so it's been a bad situation. In fact, last I checked, I have a really kind of rough spreadsheet. All my spreadsheets are rough. This one's particularly rough, but I'm trying to develop it. But there's the most recent day right there. The total return on crash is down 38%. I need to check my math, but the total return on Tesla is only up 12.93%. That's before the latest dividend, though. I'm gonna, but it's still, my point is, it's before the latest dividend on Tesla. I did factor in the crash dividend. Sometimes stuff like that happens where I get these NAs that appear. So this is still a work in progress, but suffice to say the Tesla crash trade is not doing well right now, but it's not the trade's fault. I think the trade's the trade's doing what it's supposed to. If you play both of them together, you dampen the volatility versus playing one of them by itself. But it doesn't mean you'll win. If just because you hedge doesn't mean you win. And lots of times when you hedge, you actually are kind of giving up the chance of winning for smoother returns. Now, I realize it's not working out like this thus far, but there's plenty of times the market goes sideways, and both of these and both sides of this are cashing without any problems from the NAV. And I would think that it's my theory that after a while of running this trade, the NAV from both sides, the distributions from both sides will build up after 6 months or something. And then, yeah, you're going to have times when one side's capped and the other side's capped. But I'm thinking after 6 months, the distributions will cushion that. But I don't know. Another way people could use this is, instead of doing what Jay and I talked about was delta weighting them, doing them in like a hedge fund would do them. Don't just do them 50% in one, 50% in the other. Delta weight them based on their option positions. Even if you did that, this thing would still be down. It may not be down 38%. It'd be down, I need to run numbers on it, but it's going to still be down. It's not like that's going to solve everything just to delta weight them. Delta weighting is not going to solve everything. I do think there's applications for these, maybe in tactical things, in tactical applications. I know people like Mike, the tactical stock scalper, like to time the market. Well, I would think somebody that's running looking at a 20-period exponential moving average and playing the short-term trends of Tesla, whenever you catch a short-term downtrend, boom, jump in some crash, and and use it as long as you see the short-term downtrend persisting. Now, you'd be out by now, hopefully, if you're just trying to follow the trend. But I think a trend follower could use these, and when they see an uptrend coming in place in Tesla, then they could get in Tesla, or they could just get in. They could buy calls in Tesla when there's an uptrend, and when there's a sideways trend, they get Tesla, and when there's a downtrend, they get crash. Or there's lots of ways to apply this. So far, just buying them in equal proportions is not working out great, but it's just because one side's been getting killed. All right. Well, Jay and I talk a lot more about this in the interview, so I'll get back to working on the interview. I'm going to watch it one more time, and then if it looks good, it was 3:00 in the morning when I watched it the last time, but if it looks good this time, we'll go ahead and release it. Anyway, I appreciate you guys' patience. I hope I didn't forget to cover anything today. I'm trying to make these reports quicker and straight to the point. And I'll try to always do the profit boxes first, so we can see where the strike prices are. Then if I have something I want to talk about, like Tesla and crash or whatever, I'll put it at the end. So hopefully people that don't want to listen to me talk have already tuned out, but they've got their strike prices. Sorry about missing the profit box on Mr. I will update that before the next update. All right, guys, you have a great day, and I'll be back later.